But what really happens, into a gap is what the market does post the gap. And that is what we focus on as order flow traders, as derivative traders who are tracking the short-term moves of the market. Whenever we see a gap, the most important takeaway for us is how is the market responding to that gap. And this is an order flow chart off screen, and this is an order flow of traded volumes. Right now, there are a few things we look at when we're looking at this chart. And the first thing, if you are having this chart open, is you're focused on this 10-bar chord, which is around that 40,000 number. Now, for those who saw this order flow chart yesterday, and I posted it on X as well, on Twitter as well, this is consistent. This is consistent with the number of yesterday, which was in that region of about -30, -40,000. Now, a few things go for us when we are speaking about a COT. The COT, because it is a number generated off the demand and supply of the market, and I'll repeat that again. It's a number generated off the demand side traded volumes and the supply side traded volumes of the market. And you have to pay attention to this number when it is big. So I will not really pay attention to this number when it is about -5,000 or -6,000 or -7,000 here and there. There is always demand and supply in the market, and the market has to show us demand and supply. And because the market is showing you live demand and supply, this number will keep ticking. There will always be a number on screen, and that number will always speak to you. What we have to note over here is what really happens when this market has got some extra imbalance via the demand and via the supply. So in that case, we look at that number as being above -20,000 or below +20,000, and that tells you that there is more demand or more supply side imbalance hitting the tape. And we had that number of -30,000 at the close yesterday. Through the close of yesterday, the number, the selling was evident, and that would always tell you that this market of supply side imbalance, and hence we got a gap down.
But what I want to draw upon over here is the equation between buyers and sellers, or demand and supply. And at every point in time, this equation keeps changing. And because it keeps changing, price moves. And price moves only when demand, price moves up only when demand is greater than supply. Price moves lower when supply is greater than demand. So once we understand this market as a basic math between buyers and sellers, between demand and supply, what we have to understand is how do we track this demand and supply line. And all my years, I have been trading, I have been able to do that only by what I call an order flow chart.
Good evening, everyone. Good evening. I hope I'm audible. I'm able to come across and the sound is good. All right. So we are here today to talk to you about the M flow, which we've just launched earlier this morning. And I'm here to walk you through about what it is all about, why there was a need for it, what exactly does it do, and how you are going to utilize it in your trading requirements. So the floor is open, okay, for questions. And if you have anything to ask at all specific, okay, to M flow, I'm here, okay, to do this session, to talk to you, to walk you through it and to explain to you, okay, why there is a need for it. Right now, first and foremost, okay, where do you find the M flow? It's in the elite section right here under smart candlesticks. So we basically, okay, made this sub menu, which is below the order flow and the market profile, and basically about candles, and shows you, okay, what is the price behavior of the market. Now, our jobs as traders is to interpret what the market is telling us, the message which is coming from the market, and that message, okay, we've traditionally used the volume approach to understand it. So you will not find us as price based activity traders adding indicators of price, etc., to understand what the market is speaking. That is a very good approach, a different approach from what we are doing. We instead focus on the volume metric, the information which is coming in from volume, and our role as derivative traders is to understand what volume is telling us, because based on what volume shows us, tells us, we can fathom, okay, what the market wants to do next. Right. So what we've done is, within, okay, this menu, the smart candlesticks, you'll have, okay, the main panel showing up like this. We found a way to find out whether money is coming into the instrument or money is leaving the instrument. Now, why is this important, and how is this going to benefit us as traders? First, a little bit of background, and I want you to understand, okay, the concept behind it, because once you know the why of it, you'll be able to understand exactly, okay, what we are trying to do over here. So in market profile, we have a saying. For those of you who've read James Dalton and all the big books on market profile, and in fact on order flow also, you would know that the market profile talks to you in terms of old business and new business. Now, what exactly is old business and what exactly is new business? So old business would be something which is already in the market, an existing position, okay, and that position changes. And when that position changes, so suppose somebody's got some sold calls in the market and he covers those calls, you can say there is old business at work, right? Whereas somebody who's got no position at all in the market, okay, and he thinks now that the market is wanting to go lower, so he introduces a fresh put in the market. So that's what we call new money or new business coming into the market. So the fundamentals are very simple. We are not innovating or we are not doing anything new over here. We are following those guidelines which were long established in terms of tracking the markets uh, in terms of old business and new business. So that's foundational. That's the concept at work over here. You would have this question, okay, why are we doing this when we have order flow? All right, and order flow is something similar. We track the demand and the supply, but the whole concept behind order flow charting and to use order flow is to track what we call intent or aggression of the market. Right. So for the past few days, you've seen, okay, that the market is been quite and in a range. That's because, okay, the aggression or the aggressive intent, INTENT, the intent of the market is not there. So there isn't a lot of that big hurry to introduce volume and move the market in a certain way. Right. So that's the order flow way of looking at the market, to track intent, because once you track intent, you get to know who is the aggressive players in the market. And by definition, the aggressive traders are the ones who move prices. Right. We're going to keep that sacrosanct, okay, and we still have the order flow out for us. But the order flow, okay, is for that mini decision making, that split decision making edge which you require. For that, okay, you'll keep the order flow. The M flow which we introduce is more of a positional edge, and is to tell you when existing money is moving out of the market, or when the market is getting in with fresh positions in the market, right? So that is the foundational concept. It's about understanding old business versus new business coming in. And when we're talking about business, we're talking about the flow of money, the flow of liquidity, new information coming into the market via new contracts, old contracts being written away. Right now, a part of what we have in N flow is already there in the order flow charts, in terms of the responsive activity which we have in the order flow charts. So if you've been through those charts, you know already that we talk in terms of responsive selling and responsive buying. Now, what exactly is responsive buying and responsive selling? It's old business which is closing. So as a marker, as a formula, you will see that responsive activity is basically stopping a move which is already happening, right? So a market keeps coming down, 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 and suddenly you see an RB bar coming, a responsive buying pattern coming in. Now, what is this responsive buying pattern? This responsive buying pattern is somebody who was already short. The market moved to his position, moved to his plan, and now he's booking profits. So that is a cover order which is being put, and it shows up in the market as a responsive buying pattern. But to put it in another way, that is also old business closing profits, closing and booking profits, and taking that position, taking that profit, taking that money home. So we are going to see some of that responsive activity on the M flow charts, old business growing, as well as we will be witness to a lot more new activity coming in. So this, you will be able to see at the start of the series as new money flows into instruments. You will see, but people are building positions, right? And we'll follow this up as a cycle, from the building of positions to the exit of positions, and we hope this gives you the edge which you require. It's all about the money floating around you, and those billions, which are at work in the market alongside you. That defines, the role of price in the market. So we hope, via this tool, that you get to track some of the money which is trading around you. Right now, the focal point of M flow, again, smart candlesticks. You will have to go, to your settings to activate it. So you'll go to this lower bottom panel right here at the bottom left. You have another option to come in via the panel controls also, but this is more permanent. So if you do some changes here in this gear icon, this will be saved for the next time you load. The panel controls are a temporary option. So if you're in the middle of the day and you want to see another view or another version of the market, then you look at the panel controls and change. I'll walk you through both of them, but let me just show you what is there in this gear icon and how you can activate it. I've already activated it. So this is my current setting, and I've added M flow over here. So you'll have volume, you'll have COT, and you'll have the DOI also. I've added M flow, and the M flow is panel 2, which is the second panel from the bottom. Panel 1 is again got the same volume, COT, DOI, and I'd like to see M flow against the net volume of the bar. Right. So what I'm doing over here is I'm plotting, the volume of the bar, and volume is sacrosanct to the work, we do at Vtrender. And in that volume, I'm trying to find out which of the volume is new business, new money coming into the instrument, and which of the volume is old business or existing positions leaving the market. So that's what these two panels are all about, and that is what we are going to be trying it. So I've already done this, and this is what it is. So you save your settings, and once you save your settings, you'll get exposed to a pane like this. Now the M flow is right here, and we we've normalized this so that there isn't a lot of abrupt bars showing up. But what it essentially shows you, the price pane is always going to be on top, but this is the volume information which is coming in. And in this volume information, you'll find a series of green bars and red bars over here in the second pane, the M flow. And it's always going to be measured as red and green. And because the market is moving, and this is just a 3-minute chart, you will find these bars showing up every 3 minutes. So you plot it as a 30-minute, you get a 30-minute variety of it, or version of it, and whatever time frame you choose. You have to go by two things over here. One is the color of the bar, and if it is green like all these, that is new business coming into the market. All right, and if it is red, that is old business. That means existing positions leaving the market. Now, why is this important? Because old business tends to stop a move, or does not allow the business to continue, allow the move to continue. When a move is going up and somebody who's already long books that long, what we are saying is that if no more demand comes, the existing demand in the market is reduced, right? And because the existing demand in the market is reduced, price has no more fuel to continue upwards. So that's why every time you will see a red bar, that means money is being taken out of the instrument. M flow is negative, and that will tell you that the move is about to pause, or it can no longer continue. Now these are defining the flow and the way we are going to be working with this. So these are fundamentals, and I want you to pay attention to it, right? At the same time, because the market is moving, and the market is not just dominated by only big institutions and big traders, there are small traders also who are working in the market, and not all of them are going to be trading size at the time. So the M flow is going to keep printing, and you're going to get numbers like -10, -20, +40, +40. Remember, a minus number or a red candle is money moving out. But you got to pay attention to the ones which are above 40, above 45, 50. That tells you that within that volume there was some decisive move which was gonna be there. If the volume of the bar is good and the move has got legs, volume of the bar traditionally is gonna be bigger if the price range of the bar is bigger. So more range for the price to move, more volume comes in. That's why we've added M flow to tell you which part of that volume is actually old business and new business. So you're going to be focusing on the areas above +50 and -50, and that will tell you that move is got some more intent going away, right? So today is this is the chart of today. So you've got a lot of green coming in and then some reds. Traditionally speaking, towards the end of the day, around 3:15, 3:30, you'll find a lot more reds coming in. That is your intraday business, which was opened in the morning for a profit, is closed, is closing, right? And that's why those reds will come. But this will work out for you in your option charts also. And the key over here is to track the M flow in the options market. The options market is bigger than the futures market, and that keeps telling you a lot of things about what the market can do next. Right now, this is my 25,400 CE, and I've plotted M flow over here on this call. Right, and you'll see a series of greens coming in. That was all the early writing. You got to read everything as a sequence, and towards the end you will see a lot of reds coming in. So this is typical of an intraday activity, money leaving out, or that means people who didn't want to carry positions, they are booking profits out over here, right? But overall, what you'll see between a Friday to a Tuesday, Wednesday, you'll see a lot more green coming up in the M flow. That means money is being established in the instrument. Not everybody is an intraday trader, so this will be somewhat smaller to what the money has already come in. Some of this is got definitely carried away, carried to the next day, and they will show up. But if this goes into a Thursday, and the real big element of that chart is going to be your settlement day, where you'll be able to track closely in red or a green a series of red bars in the middle of the day on a settlement afternoon will tell you that money is leaving the instrument. Okay, that can be okay compared okay to your traditional open interest closing. All right, it gives you okay the same kind of data, but with a little bit more conviction, you can know for sure that this is now a convincing move and money is leaving the instrument over here, right? So what we recommend over here is to keep these settings as they are, and you can plot a 25400 PE on the right and keep settings the same, the time frame the same, and across both of them you will now okay be able to tell via the M flow that this is there. So I see on this chart now that some of that 25400 CEP, the chart is more or less similar. So you can track over here that this was actually a short, a 25400 CE and a 25400 PE straddle written from the open. All those green bars told us about it, and towards the end it's almost similar. So they covered it as a pair also. So it's not just the call okay which was covered, the put also okay got covered, and maybe okay they come back tomorrow morning and show us a green in the M flow indicator out over here, right? So this is the way okay you can use okay the M flow, and I hope okay you can okay work a lot more with it. This is a little bit more of a swing indicator. That means it's not something okay which you keep holding for about 1 minute or 3 minute or a 5 minute time frame. If you are the kind of trader who works the swing, you know, from 1 day of hold to about 5 days of hold, you would find this interesting. You would find whether if there is a spike in the middle of the day on a Tuesday and you intended to hold that position to Thursday, uh, in that spike, should you cover your position or not? Okay, so I've worked with this a number of times over the past few weeks, and I've seen okay that suddenly okay the call spikes and it goes okay against your holding and against okay what you want to do. At this point in time, you are wondering at 176 right here, if it spikes, whether to hold the position or not. You look at your M flow. If the M flow stays up, there isn't a lot of panic like this. There isn't a lot of panic like this, a whole bunch of them leaving. You stay with your position, okay, because okay the big money okay is still okay coming in and adding size back into the market, right? So we all know that the 25400 CE and the 25400 PE was written, and this is one instance okay of how okay the M flow okay helped us visualize that information, right? So this is about the use of the M flow. It's actually a very simple way of looking at the market, and it goes okay with the plans okay which we have at Vtrender to introduce to you tools which help you understand what the market is trying to tell you, right? So I've kept saying this all the time, and I mention it on my Twitter as well. The market speaks to us, right? Sometimes it shouts, sometimes it softly whispers. We have to have the ears to listen to what the market is trying to tell us. It's been a quite few days in the market. The market wants to balance, and we all know, we spoke about this earlier, that the entire month of July is you know, it's coming up across as a consolidation month. And that's not surprising because the month of June was an uptrending profile, and we closed in an imbalance at the top highs of the profile of June. So what is due next is a movement okay to balance. The rest of the market calls it consolidation. So we are coming into July expecting consolidation, and within this consolidation we are seeing a move above the breakout zone also, right? So that's why okay the larger time frame wants to quieten, the smaller time frame wants to quieten. So you're seeing okay those 25-30 point moves in the market. Once you understand it, you have to okay strategize around it. You cannot go against the message of the tape. The tape wants to be quiet. The tape okay wants to consolidate. The tape is telling you that it wants to balance. If you are okay fighting the tape, and if you're doing things okay which are against the nature of the market it is in, then you're opening up yourself okay to a lot of pain, a lot of loss, and you're going against what is the message of the market. So never do that. Respect what the market is doing. Learn to understand what it wants you to do, and as long as you're syncing with the flow of the market, things should get good for you, right? So this is what I wanted to communicate about the M flow. If you got any kind of questions to ask me, feel free to ask me. I'm here. We can answer those questions for you. So it's there under smart candlesticks. I know some of you had asked me this on my Twitter feed. Smart candlesticks, make sure you activate it under those settings and use the gear icon, because it's gonna be permanent. M flow is where it is, and I think this is gonna be very useful for you going forward, and how you can work best with these, right? So again, how are we getting this information is a question some of you have asked me already. We are subscribed to the entire feed of the exchange, right? And think of this as a waterfall. So you are basically taking a bath against in a waterfall in nature, and contrast that to something coming out of a tap, right? And you're taking a shower under a tap and a shower under the waterfall. It's two different things. So because we are subscribed to that large feed, we get a lot more to do with data, and we are focused on the kind of data. I know some of you also are subscribed to sub distributors, etc., but they edit that feed, and then their focus is only about the open, high, low, and close of those candles. Our focus is different. We are a volume people, and we are interested in picking up volume information from the market, right? So whether it's the order flow, whether it's the market profile, whether it is something like what we have right now, we will keep looking at that feed and trying to find out ways and means in which we are finding an edge in the market, which we are in. And one of the things we look at is demand and supply. So I talked to you about the demand and supply, about tracking intent via the order flow. The second way of understanding the market clearly would be in terms of old positions and new positions, which is where the M flow comes in. So I'll just plot some questions out over here. So the question is, does green mean? So we are looking at green as in new business coming into the market. So you have to the foundational concept is the same old market profile concept of old business versus new business. The green would be new business. So in an option chart, that could mean writers also coming in, especially through on a Friday, Monday. But towards Wednesday, Thursday, that green could be buyers entering the market also. So it is subjective, but think of this as new business versus old business. And every time new business comes, there is a chance of a new business, a new move coming in. Now, if this new business, like I shown you in this chart, is across the calls and the puts, and not exactly only in calls, then the market is sideways, right? That means that new business is all written, all rights in the market. But if I had to see this across all my 25,400 CE, 25,300 PE, and all subsequent in the money calls also, the same kind of things, then I would say that the new business is now in long calls, if I had to see it. Think of it in terms of new business and old business, and things should make sure. So the question is, can you interpret one portion of the inflow influences market? So this is entirely a dynamic chart where volume is there. So I was earlier looking at one particular chart where the market was influenced, and that was the 25,600 PE. So let's load this up. So right around over here, so while that 25,400 CE was loading, so we'll have a number of these examples. I'm sorry, it was not the 25,600 CE, it was actually the 25,400 actually that 25,500 PE, and we were looking at this chart live in the morning today, and we are going to be finding a lot more examples of these going back. So what has happened over here is just to show you one example of how M-flow works. You just focus on the lows of this P. This is the 25,500 P, 5th of July, and right here just before the lows got hit around this 123 125 zone, see the markup in M-flow, these two bars. So I will not really pay a lot of attention to one bar, but two and more coming at the lows is telling you that there is a shift happening. So somebody was just coming back into the instrument over here, and what did he get? He got a move from 125 right up to about 160 175. So it's a small market, but in terms of what happened to the day today, and this is relatively speaking, this was a major mover. Again, what I'm doing is I'm not looking at this entirely, and I'm looking at this as a bigger number of everything else over here. So if I find that there are two or more bars bigger than anything else on my left, that means there is substantially more interest coming into the market than it did at a previous place. Right? You can pair it off with your IB and IS signals also, which are based on order flow. But remember, these are two different concepts at work, and the foundational principle in M-flow is about old business versus new business. The order flow is about intent, about aggression shown by old as well as new business coming into the market. Can we use this in combination of to understand bias? The best way in my chart, the messaging which we have in the market profile. So I've spoken to you about the understanding of learning about what the value area teaches us, and the value area low, if price is trading below the value area low, you can say that the market is biased southwards. The price is trading above the value area high, you can say the market is biased northwards. If the market is trading in the value area of yesterday and day before, then you can say that the market is biased sideways. Another way of doing it is VWAP Depok. If the price is trading around VWAP Depok, you can say it is a sideways market. Comfortably above VWAP, the buyers are in control. Comfortably below VWAP, the sellers are in control. A third way of looking at bias in the market would be your IB and IS signals. If you get an IB 30, then yes, there are initiative buyers in the market. No IB 30, the market is sideways. Right now, NTM chart. So whether all of you are familiar, that when you do a two window mode, you get another menu, which opens up over here, which is where my marker is. So you see this thing option over here, which is the charts, and you'll find three dots over there. You have a mini menu which opens up if you click that. So I'm going to do just that. I'm going to click, and from here I can add an NTM volume chart right up on my screen. So let's plot the NF volume X charts from here. Right, so you scroll down, you can pick up any number of charts over here. So this is the NTM volume X, and those signals are that the further these two move away from each other, the further the blue moves away from purple, the option market is telling you that the buyers are more stronger than the sellers. But today it was intertwined, right? They were right next to each other. So it's typical those bias signals in the markets of the charts, telling you the same exact thing which we know, and that also in the valuated it against my market profile, and the gray is the value area high and the value area low. So today we didn't make any attempt above the value area high, and we in fact did not position ourselves below the value area low also, right? So we didn't go below value area low, we didn't go above value area high, we stayed in the value area of yesterday, which is why the value was in that composite, and last 4 days also we are within the value area. So as we keep staying in the value area of the previous few sessions, you can definitely say that the market is sideways, it is in a balance, it is consolidating, right? So Another thing, okay, over here is I'm not sure, okay, if you guys know. So that menu I showed you in the bottom, there is a third menu, okay, which opens up from here and your bottom right corner. And from this, okay, you can easily, okay, go into your candle chart again, which is this second one from the left. This will open up, okay, the candle. To the order flow chart as well, the same right bottom corner. Right, so it's just okay about you, okay, being alive, okay, to those possibilities out over there. We built in a lot more features for you, okay, to understand. And this data is 100% reliable because we are on that feed directly, okay, from the exchange. We don't chop, we don't cut, and we don't bring it down to any other version except, okay, the chart, okay, which is we are looking at getting into that volume information from the market. So what happens at the exchange is getting replicated over here, T for T, tick for tick, right? So you will get to see exactly, okay, what is happening. So the central focus remains over here also, that you do not do any kind of guesswork. Okay, you trade, okay, to the market in front of you, and you do what the market is doing at the moment right over here, right? So this is, okay, where we are, guys. I hope, okay, you use, okay, what we've spoken about. This is a classic tool for you, okay, to look at what the bigger money is doing in the markets, to avoid rookie mistakes. The regulator, okay, tells you that so and so number of people, 94% of people lose money in the market. They don't tell you why, right? You got to ask yourself, okay, why are these 94% people losing money to markets? Why isn't the regulator telling you, okay, what is the reason, okay, this 94% is losing money, right? And to find that reason, you'll have to go into the 6% of people who are making money. And they know the difference between delta and gamma. They know, okay, what is theta. They know, okay, what is vega. They also know, okay, what is the movement, okay, of every single option instrument out over there. And they know all this because they've been working the markets, okay, many years. They understand each and every single element of the charts, right? So it's not, okay, what the majority knows. It's always about what the minority knows. What are those 6% people doing who are making money for themselves, who are profitable? And our job as traders is to find out, okay, what these 6% are doing, right? And you don't focus on that 95% because they are losing anyway, right? So all this thing is going on about Jane Street, etc. I had a dinner, okay, with one of my trading friends yesterday, and we've been trading, okay, for about 22 20 years. He referred to that. I put out a few tweets, okay, saying that this is all about delta and everything is wrong. So he had a comment to make about all those, and it struck me. I just want to share, okay, what that conversation was. He said that the regulator does not seem to be knowing the difference between delta and gamma, and when it comes to options trading, and they don't see, okay, it as important. So the people, okay, who are there in that exchange, okay, what would be the end result of those people? So that knowledge factor is not there, guys. And what he further went on to add, he said a lot of big money will keep coming to India because now everybody knows that 94% of traders do not really understand how derivatives work. So that's why, okay, you'll see a lot of these big money, big funds keeping coming to India. In fact, JS came in 2 years back, 3 years back, after those reports were published. And that's a telling statement because they know that 94% of people are not making money, right? And it's very easy to trade the market when you know that bulk of them do not know how to trade. So he concluded, okay, with one statement which has struck with me, and he said, "Ando me kana raja." So that's in Hindi, which means that in the world of the blind, the one with the one eye is more powerful, right? I want us, okay, to be in that 6%. I want all of us, okay, to not be in that 94% who do not know how it works, right? So this is an opportunity to we have, okay, those tools with us. We have, okay, those instruments and those measurements, okay, with us to see what exactly is happening in the market. When JS, okay, was making those moves, they were not lost on us. We knew, okay, what was happening because the order flow showed, okay, what they were doing. And we were visualizing, okay, most of that which happened. Of course, okay, the confirmations used to come in later, but in live markets, okay, we could see that happening. And anybody with an order flow chart, okay, was knowing what is happening. As long as you are knowing what is happening, you are ahead of the 94% of the remaining market. That's your edge. And the more you focus on that edge, on being where those 6% of the people are. I look at this chart, and for me, I don't look at what the majority is doing. I'm just interested in knowing, what the big money is doing on this chart. And that's been the focal point of how I trade. Look at where the large money is doing. So the large money is quiet, I am quiet. If they have entered a short, I'm entering a short. If they've entered a long, I'm entering a long. And M flow with the order flow, I hopefully will help us to get better at understanding what the rest of the market is doing. Right. So with that said, I wish you well. I hope this has been useful. If you've got anything to ask me about how this works and all, we are very open, and we want to see how you do it and what kind of responses you get with the M flow. So keep that conversation going. Talk to us, write back to us, support@vtrender.com. You can DM me on Twitter as well. And I hope that you do communicate, and together as a team we can definitely make a lot more. Right. So thank you all for joining in. I'll wind this up. We'll put a recording of this on Twitter and on YouTube as well. And I hope you go through it and utilize this tool to the fullest. All the very best.